Hey everyone, John here. So in today's video, I'm going to go over how I'm trying to apply machine learning to give me alerts for my equity research email. I don't think I came up with anything crazy here, but yeah, let's go over the strategy. I think I'm going to my next project will be trying to determine whether simple moving averages actually generate different returns than the market. So I'll take a look at that on another video. But yeah, let's take a look at this. Isolation forest is an anomaly detection algorithm designed to isolate rare or unusual data points. It identifies anomalies by randomly partitioning data and measuring the number of splits required to isolate a specific data point. The key with the isolation forest, no labels are required, so I don't have to go and mark the data. Random splitting, it creates isolation trees by randomly selecting features and split points, and then path length. This is a little bit more technical, but the gist of it is trying to identify market anomalies where maybe the returns of a given day don't match what the average returns or like what a normal return would look like, right? Hence it's called an anomaly. What my vision really was to mark the data set, the price data set, so that I can use XGBoost, which is a supervised learning, to try to predict future big price movements. So think about it like this, right? So let's say I have a stock like this, where all I have is the closing prices, right? I mean, you can have open, high, low, close, whatever you want on the chart. But then eventually, I tried overlaying like different indicators. I know, John. Don't be a technical analyst, but I just had to do it. But yeah, I added some Bollinger Bands. If you're not familiar with what Bollinger Bands are, basically they're just standard. They're like, how do I say this? The green line is a couple standard deviations above the orange line, which is the mean, and the red line is a couple standard deviations below the orange line. Basically, like, it's just trying to identify a trading range for the stock. So obviously, if it hits the green line, I mean, I say obviously, but like if it hits the green line, you're a couple standard deviations above the mean of the stock. Hence, you should probably kind of sell, is what the technical analysts say. And then when it hits the bottom, that's usually a buy signal. So like literally it's just indicating their range for the stock prices. If the green and the red line diverge, that's just saying that there's more volatility, right? The standard deviation of the stock prices is bigger, so hence that's more volatile, right? But yeah, like the gist of the Bollinger Bands is, if it's hitting the red line, you go long. If it's hitting the green line, you're supposed to go short. Maybe I should actually change this chart up. Let me do that. Bollinger Band, orange band. Let's just change this up so it kind of matches. Okay, there you go. But yeah, so the upper band, if it hits the red, you're supposed to sell. If it hits the green, you're supposed to buy. That's basically what these technical indicators are saying. So what is the RSI? The RSI is basically trying to predict. Well, it's not trying to predict. It's basically saying that the relative strength of a stock relative to its benchmark is like different. So let's say if the RSI hits the green line, similar to the Bollinger Band, like if it hits the green line, you're supposed to buy. If it hits a red line, you're supposed to sell. That's basically how it works, right? So I tried a couple different ones, but this is just the ones that I end up sticking to. I'll probably try simple moving averages. Like there's golden cross. There's like a couple different different technical indicators that I'm going to test to determine whether or not they actually still work. But yeah, like we'll see. I'm kind of skeptical about technical indicators as a whole, right? And the thing that has to be added in is the features to the model have to be fundamentals based. And to do that, I have to use LLMs, right? So what I'm going to do is eventually I'll try to feed in these models into like a natural language processor to determine their sentiment. And maybe if the sentiment is true for positive, then I'll add that as an indicator. And if the sentiment is false, which is negative, then maybe I don't buy the stock. That's another feature that I might add into this machine learning model to try to maybe predict. But for that model, I'll be using like extreme gradient boosting, not isolation forest, because isolation forest is literally just trying to identify market anomalies to mark things. But maybe I just mark things my way, right? Like I'll try to find another way to mark, because the isolation forest doesn't really do well. And you'll notice, you'll look at the results and you'll be like, it's not even that, it's not doing anything crazy. But yeah, so that's adding in some information. But yeah, so the gist of it is like RSI and Bollinger Bands, it's not it. It really is not it. Like I don't think it actually does anything. But yeah, like maybe it does if the stock is within a trading range, right? Like let's say if a stock trades within a range, like a Forex, oh my God. Like I'm not gonna, oh God. But yeah, like there's going to be some asset classes where they trade within a range that might be like beneficial, right? But yeah, so let's go over what the isolation force is supposed to do. But yeah, it's supposed to how is this relevant? Anomalous price movements, abnormal volatility spikes, or unusual trading volumes are critical indicators of potential trading opportunities. Isolation force can highlight these rare events without requiring pre-labeled data, which is often unavailable in financial markets, right? So I was trying to label the data essentially with the isolation forest, and then I would feed the labeled data into XGBoost. So XGBoost is a powerful supervised learning algorithm widely used for classification and regression tasks. It builds an ensemble of decision trees in a sequential manner where each tree focuses on correcting the errors of the previous one. Supervised learning requires labeled data for training, whether a price movement exceeds a certain threshold, which is pretty much what I'm trying to do with the isolation forest. Gradient boosting minimizes a specified loss function by optimizing model predictions, kind of like I don't know if I want to get into it that hard. Maybe I'm gonna go into like what XGB is. But you could definitely look it up. There's a lot of good videos that I use to learn about it. Feature importance provides insights into which features, RSI, volatility, and anomaly labels contribute most to predictions, and then how it's relevant to stock data. XGBoost can learn patterns in relationships and engineered features, technical indicators, and anomaly scores to predict significant movements or trends. But yeah, like my hypothesis is maybe if there's this trading strategy called the golden cross where you have like a simple moving average, which is like faster moving. So it'd be like a 20-day simple moving average versus let's say a 50-day simple moving average. If the 20 moving average is above the 50 moving average, that would indicate like a buy or a bullish signal. If the 20 moving average is below the 50 moving average, that would be a bearish signal. Maybe I'll take a look at whether or not if there's a statistical significant difference between like the return profile of a stock when its SMA is lower, when its 20 SMA is lower than its 50 SMA versus above its 50 SMA. Oh man. Like now that I think about this is getting way too numbers oriented. But yeah, like this is what I try to do. This is what I'm going to be doing. And then combining the two, so anomaly detection, so use ISO forest to detect price movements, label these anomalies in the data set, and then add some features using XGBoost, and then predict with XGBoost, and then trigger alerts and generate reports based on the predictions of the XGBoost, right? I kind of went into it in another video. That video is kind of popping off. That video, I'll probably put a link into the description about it. It's kind of like, it's way way less technical, but I don't really talk about like how. So I think it's this one, like this AI will replace human research. That one's way less technical than this video. So maybe you can watch that instead if this is getting too technical for you. But yeah, like at the end of the day, that's how I'm trying to predict some stocks. Yeah, that's how I'm trying to predict some stocks. But yeah, so essentially what I do is I pull Y Finance, pull like, I'm just going to go over like how I do it, because some people are interested in doing this themselves if they're non-techie. But yeah, so you pull in, I use Google Gen AI to just get an understanding of the business. And then I use Matplotlib and Pandas, Y Finance, sklearn to run the isolation for us. And then sklearn pre-processing to scale the data so that it doesn't get skewed based on based off of like the how do I say it, like this, the largeness or the smallness of the data. I know there's like a technical term for it, but yeah, it just makes it scalar to be between like 0 and 1 or something like that. But yeah, okay, so NVIDIA, if you're following this channel, I've been looking at NVIDIA pretty much for a while now. But yeah, now you've got 5 years of stock prices. So as you can see, NVIDIA kind of went from like 10 trading at 10, spiked in 2022 due to the GPU shortage. After 2022, it dropped off. 2023, that's when AI started to really go crazy nuts. And then now they're trading at like $130 per share. But yeah, so now this is adding in the Bollinger Bands. Yeah, Bollinger Bands plus the RSI. Kind of self-explanatory, like I was saying earlier. It actually looks like the NVIDIA stock returns follows a normal distribution, which is pretty interesting. But what my vision is really is trying to identify situations or like some technical indicators where, okay, so like right now, this is where, this is like the normal distribution, right? Let's say that's a normal distribution. What I'm trying to identify is maybe there's a, there's like some type of indicator that would help me identify where like the, obviously like this is a perfect situation, right? Where if I use that indicator, the standard deviations of the returns is slightly more to the right. and like if like let's say if true, then blue, if false, then hopefully green or hopefully fuchsia, right? And then I can be like, hey, I'll only buy a stock if it's trading on this one. If I won't buy a stock if it's trading in this one, right? That's what I'm thinking with the SMA. That's my hypothesis with the SMA. Like maybe I can have like statistically different distributions, and that might be like an alpha generator, right? But yeah, so right now, this is with no transformations to the data. It looks like NVIDIA Corporation has like a distribution around the mean of probably just slightly above 0 on a day-to-day basis. Okay. But yeah, so this is just me like trying to test different features. So in this specific iteration of the ISO forest, I put in return, volume, normalized price, upper band, lower band, and the RSI. And then this is just like cleaning up the data to be fed into the machine learning model, scaling the features, and then training the isolation forest. So contamination 0.01, random state 42. So 0.01 is just trying to say like how many anomalies I expect within the like what percentage of the data set do I identify as anomalies, and then random state, you kind of just keep that at 42. But yeah, so then once I run the ISO forest, it's then trained, then I use the ISO forest to predict some anomalies. And then in this field here, I'm extracting the anomalies. So based off of a contamination value of 0.01, I found that there was 13 different anomalies. Let's take a look at when those were. 2021 on March 24, there was an anomaly of return of 17%. 2021 November 4, there was a return of 12%. And then it's just a bunch of different like high or low returns. Like as you could see, like most of the returns kind of are higher or lower, like pretty high or pretty low. And then you could see like the RSI is pretty low or pretty high, right? Like it's around the 20 and to 30 range. Like I was saying before, let's go back up to the RSI. I know this is getting technical and whatnot, but yeah, like if this chart right here is saying oversold if hitting below 30, overbought if above 70, right? You can see that there are some anomalies. Let's take a look. But yeah, I don't think you want to be trying mean reversion on NVIDIA. It's like a trending stock, right? It's definitely a trending stock. But yeah, where was I? Okay, yeah, here we go. But yeah, you could see like the upper band and the lower band and the RSI. So like every time it's overbought, or like most of the time when it's marked as a anomaly, it would either be like a pretty high or a pretty low RSI. Like for example, this one is kind of a moderate RSI, 43, but then look at the overbought situation. When it was up 12% in one day, it indicated like a overbought with the RSI of 94. And the volatility, you could see like the volatility is kind of like the spread between this March 24 is 7.4 minus 4.6 versus like in 2021 November 4, the differential between the upper and the lower bands, which indicates like volatility is much greater at 10. The difference is 10, right? But yeah, so that's just showing like that's highly volatile, and based on the RSI, it might be like an overreaction, meaning like a buying frenzy, right? Like people got way too excited. Yeah, but yeah, so based off of the random or the isolation forest, it indicated 13 anomalies within a 5-year time period. But yeah, so why don't I split the training data? You don't really need to do that type of thing with an isolation forest. All you can feed in like the full 5 years, and it's going to just find anomalies. That's all it's doing. It's not trying to do anything like crazy like prediction. So you don't need to like split the training data, right? But yeah, on the XGB, I'll probably try to do that. But really, on my next video, I'm just going to try to identify like some technical indicators that might be statistically significant. But yeah, so let's plot the histogram of the stock anomalies. So as you could see, like the stock anomalies aren't really, the anomalies definitely are different. So this was the normal distribution, and now it's trying to find the anomalies, which are like kind of within the long range and the high range, right? Or the short, like very low or very high, right? And it kind of does find that very low or very high without me telling it, hey, find the very low and the very high, right? But yeah, so based on those anomalies, if there was like a different, if there was an anomaly, I would want my AI equity research script to run to give me an equity research report to decide whether or not I want to buy something, right? Turns out ISO Forest isn't like, I don't know if these are the times when I want to be getting an email, right? Like, unfortunately, I can't like zoom in, but some of these situations are just like after a big buy or after a big sell. Maybe that will prevent me from like emotionally buying a stock or emotionally selling a stock. Like imagine you're at the very low, you get an equity research report here, and it's like, oh, okay, maybe it's oversold or it seems like a long. Then you would read the equity research report and be like, hey, I'm gonna buy it, right? But like imagine in these situations, right? Like it says, okay, here's the equity research report on this section right here. You buy the stock, it shoots all the way down. Like I don't know if there's any explanatory power here, really, and I don't think it's marking the stocks that I want. So at the end of the day, like I think the ISO Forest is kind of dead to me. Unfortunately. But yeah, that's just like I think this is my second machine learning model. Over the weekend I really tried hard to learn how to do machine learning and some different techniques, and these were the ones that I found really interesting for my use case, which is the isolation forest, which is just identifying anomalies, and then XGBoost, which is like trying to predict some stuff. But yeah, until next time, please like and subscribe. Bye.